Hey everyone, Ben here and welcome to Motivation to Invest. Healthcare, the pharmaceutical industry, this industry has been at the forefront of everyone's minds recently, especially this past year, mainly due to the global pandemic. So looking forward, it's clear to see that the healthcare industry, I think, will have a lot of potential tailwinds behind it. So in this video, I'm going to answer a question which I've been asked so many times: which is the best pharmaceutical stock to buy right now? But more specifically, which is the best dividend play and potential turnaround stock? So I'm going to be diving into a company called Takeda Pharmaceutical, ticker symbol TAK. And this is a company which ARK Invest, the investment firm which specializes in disruptive and innovative technology, is extremely bullish on. But what's interesting about this stock compared to other stocks that Kathy would usually invest into is this stock really is a very mature company. So Takeda Pharmaceutical is over 200 years old. So this company was founded back in 1781. So it's not really one of these high growth SPAC plays like we usually see ARK Invest investing into. It really is a mature company, but it does have a dividend of nearly 5%. So great for you dividend investors. So we're going to dive into that company. Before we get right into it, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in this video at all, feel free to give it a big thumbs up. With that being said, let's dive in. So diving straight into the share price for Takeda Pharmaceutical, and straight off the bat we can see around February 2018 the stock was around $30 per share. Now the stock has had a major decline, so it's down at the moment by 32%. So this is why I say this could be a potential turnaround play. If I dive into the short term of this stock, since February 2021, the stock is now up 19%. Now, I actually recommended the stock on this channel back in April 2020, and this was around $14 per share. So since then, the stock is up around 35%. So congratulations to all you Motivation to Invest viewers who invested into this stock during this time. But the question is, from the point we're looking at now, could Takeda Pharmaceutical still be a great company to invest into? Does it have growth potential, or is this really just an historic company which is just going to keep chugging along and pay us that just under 5% dividend? Well, we're going to find out in this video. So first, let's dive into ARK Invest Genomics ETF. So we're here, and we can see in the top 10 holdings, we have Takeda Pharmaceutical, ticker symbol TAK. And this makes up 3.91% of ARK Invest Genomics ETF. So I found this article here from 2019, and it basically said Takeda sees cell gene therapy in its future. Is it too late? So it seems like they're just sort of getting into this space now. So thanks to the $62 billion acquisition of Shire, Takeda is one of the largest developers of rare drug diseases. So this is one of the largest pharmaceutical companies in the entire world, and it's definitely the largest pharmaceutical company in Japan. So it seems the company is generally focused in a few areas. One is oncology, which I believe is the treatment of cancer. The other is rare diseases. Then they also have a neuroscience, gastroenterology, and vaccines. So with regards to vaccines, Takeda didn't actually create a vaccine, as we know. However, they do have a partnership with Moderna to actually supply vaccines in Japan, so that could be a potential tailwind behind this business. But what about gene editing? Because that's where I see the potential growth in the future for this really mature company. So I did some digging for you guys, and I found out that Takeda Pharmaceutical has advanced further into gene editing, inking a licensing option agreement with and through its venture capital arm, investing in Emendo Biotherapeutics. So let's just dive straight into the growth over the past few years. So despite this being a mature company, this company has over $30 billion in revenue each year. Overall, the compound annual growth rate over the past few years has been 13%, which I think is pretty exceptional over the past few years. And this is what I really want to point out with this stock. So if we look at the total revenue, this is in Japanese yen in millions. Now, the revenue back in 2015 was around 17 billion. Now the revenue is over $32 billion. So if we dive into the share price here, this is what's interesting with this company. So if I go, let's go 10 years back, and we can see in June 2010, the stock was $20 per share. Since then, the revenue for this company has doubled. But what's the share price today? Less than $20 per share. So to me, that says the company's effectively doubled its revenue, but the share price hasn't moved an inch. Of course, there's been this upswing here, but then it's gone back down now. So to me, that says the stock could actually be undervalued and could potentially double, at least in the next few years. And also, if it doesn't double and it just stays at this $20 per share, as it has done for the past 10 years, then at least you're getting that nearly 5% dividend, around 4.5% dividend. The company's also a lot more profitable than it was 10 years ago. So the company's profits are increasing. Its revenue's been quite flat this past year, which is why I think the stock is quite low at the moment. Now, the company does have a lot of liabilities, but for the industry and for a mature company like this, it's okay. They could have a little bit less debt, but for a company that's over 200 years old, it's not bad. And so generally, mature companies tend to have more debt than young growth companies. The valuation for this company, so the price of sales is currently 2, so you're paying 2 times the company's sales. PEG ratio, so this is a Peter Lynch term for price to earnings growth ratio. Anything less than 1's good. This is 0.5. P ratio is just 19, so you're paying 19 times the company's profits, not the company's sales. Now, what I've done on Stockopedia, so this is a platform I use all the time to analyze stocks. If you guys want to check out this platform, I've actually got an exclusive 25% off discount link. I'll leave that in the description below. Feel free to check it out and see if it fits your investing style. And here's something really cool you can do on this platform. So what I've done with Takeda Pharmaceutical is I've compared it with all the other players in the industry. So we've got a few local players in Japan. So it seems definitely the best company in Japan, the best pharmaceutical company in terms of revenue, in terms of profits, in terms of potential growth. I've also compared it to AbbVie, which is a great company, AstraZeneca, Abbott Labs, which is also a great company, GlaxoSmithKline, which is really struggling at the moment, the share price on that, Johnson & Johnson, established player, Merck & Co, and Sanofi. So I've compared it to really all the major pharmaceutical companies to see if this company could be the best player. And according to Stockopedia, so they've done the full analysis here, and it says the stock's the winner. So it basically says this is the best stock to buy if you're after a pharmaceutical giant dividend player right now. This could be the best stock to buy. So that's according to Stockopedia here. Of course, like all these stock screeners, you've really got to dive into the numbers to see the reasons why this stock has come up as the winner. So I plugged it all into my advanced valuation model, all the details. It was a real nightmare actually going through the numbers for this company because it's all in Japanese yen, but all in millions of Japanese yen. So you've really got to convert it over, and it can get really confusing because you're not just converting the yen, you're converting the millions to billions. Oh, yeah, it's a nightmare, but this is what I do for you guys. If you appreciate the hard work, please give this video a big thumbs up. So if I dive into the valuation output, it's actually come up as negative. I think that's something to do with the book value, so I wouldn't worry about that too much. I did check out another discounted cash flow valuation, and it says the stock is 48% undervalued right now. I do personally have shares in this company, but yeah, it doesn't really fit my investing style at the moment because I don't really focus too much on dividends at the moment. I'm more focused on growth style, but I'd love to hear your thoughts on Takeda Pharmaceutical. Do you know anyone who uses any of their drugs? They're very popular at the moment, I believe, especially in the US. So please do let me know in the comments below. If you did find value in this video, feel free to give it a big thumbs up. If you haven't subscribed yet, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do want to know in real time exactly which stocks I'm buying, selling, and access my entire portfolio, and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below for the VIP membership group. With that being said, thank you so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.